What if I told you that the concept of mortgages dates back over 4,000 years? Believe it or not, the first known mortgage system wasn't created in modern times, it was in ancient Mesopotamia. Around 2000 BCE, the Sumerians, who lived in Mesopotamia, created one of the earliest forms of mortgage agreements. At the time, it wasn't used for homes, but for agricultural land. Farmers borrowed money from temples or wealthy landowners to cultivate their land, and if they couldn't repay, the land could be seized. However, unlike today's mortgages, these agreements often involved a transfer of property or crops instead of cash. Fast forward to medieval England, where a more familiar version of the mortgage system began to take shape in the 12th century. It was then that legal contracts were introduced to formalize the process, where a borrower would pledge their land as collateral for a loan. The term mortgage itself comes from the Old French word mort, meaning dead, which referred to the dead pledge that was extinguished once the debt was paid. By the time the 19th century arrived, mortgages had become more accessible to the general public, thanks to the rise of banking systems and urbanization. Today, mortgages are a staple in the real estate industry, but it all started with simple agreements in ancient times. And that's the surprising history of how the first mortgage systems evolved and shaped modern finance.